Hello friends, very good evening. Today we'll be discussing about debits and credits. My name is Raj and this is the third episode that we are starting off. The first one was about the basic accounting equation followed by a simple example of how to record various transactions into an accounting equation into various columns and then trying to balance out the total of assets should be equal to the liabilities plus equity. So that's what we did in the previous two videos. And in today's video, we'll be talking about what is a debit and what is a credit. And these, as you can see, are balanced on both sides. So basically, we have a conception that debit means decreasing, credit means increasing. It's actually not so. So it is basically connected with an accounting transaction or a business transaction, just like a coin. A coin has two sides to it. Every business transaction has got two sides of an account in accounting transaction. What do you mean by accounting transaction? An accounting transaction, for example, one of you invest in a business, say $10,000, right? So the business is actually getting $10,000 cash. And what's the other side of the transaction? That means the business is getting $10,000 cash, which is an asset. All of us know that. So assets should be equal to the total of liabilities plus equity. So on the other side of the equation, on the left side, we have assets, which is cash 10,000, which the business has received because it belongs to the business. Then the same amount of $10,000 has to be either on the liabilities or equity. Here, this $10,000 belongs to the equity. That means the share capital which the owner or the investor has invested into the business. So on the left side, we have assets, $10,000. On the liabilities and equity side, on the equity, we have $10,000. That's how it is matched. So debits should be always equal to credits. So as you can see, it is finely balanced. Both sides are balanced. It should be matched. So depending on the transaction, depending on the nature of the account, whether we debit or credit that respective asset or liability or equity. So more of it we'll be discussing as we move forward. So here, as you see, what is exactly a debit and a credit depends on the basic accounting equation and the underlying business transaction. So what is the underlying business transactions depends on whether it is an asset or a liability or an equation and on which side of the equation is it falling into. For example, assets, expenses and losses always have debit balances. This is a rule which we need to remember. I would repeat, debits are always assets, expenses and losses which are natural balances for this. That means assets, expenses and losses have debit balances, which is on the left side. And on the right side, we have liabilities, equities, incomes and gains. So these have credit balances. How these are either debit or credit, we can understand in our next video when we really have a business transaction and we will be bifurcating them into either debits or credits. At the end of the video, you can as well see that there is a real life example how we have classified them into either debit or credit. We have two examples which we'll be discussing moving forward. Before we go forward, we have to see what are the basic assets, what are liabilities and equities. Just a small recap what we discussed in our previous video. You see that on your screen you have assets on the left side, liabilities and equities on your right side, right? So you're able to see what are types of assets. Assets can be tangible, which can be felt, which can be seen. Intangible assets cannot be seen or felt, but nevertheless they are part of a business. Similarly, there are assets which are like livestock, and there are certain movable assets like car and so stock, inventory, and so on. So assets are on the left side of the equation. Liabilities which the business owes to the third world or the third side, third parties, and equity is what the owner has invested. So basically, these should balance. So debits should be always equal to the credits. So that is the basic accounting equation. How do I remember, or how do I know whether I should debit or credit, depending on the nature of the transaction? So when I mean transaction, suppose we say the business has invested $10,000 into the business. So what the business is getting? Cash, right? The business is getting cash. Suppose you have invested 10,000, you have given $10,000 to the business, you have put in $10,000. So business gets 10,000, which is an asset. As you can see, you are going to debit because the asset is increasing. As the asset increases, that is cash increases, so the uh, term that we use to increase the asset is debit, right? Suppose you buy car. So what is happening? Car is coming in. Car is an asset. So debit car or debit vehicles. And when you are paying cash to purchase the car, cash goes out. Cash is an asset. So you credit it. Are you able to see the arrows on your left and right? So to increase an asset, we debit. To decrease an asset, we credit. Similarly, if we incur any expense, we debit it. And if we incur any losses, we debit it. Or if the owner withdraws money, because when you invest, what is happening? Cash is coming in. When the owner withdraws or drawings, the cash is going out. So when the cash goes out, what do? We credit it. We credit it, right? Assets, expenses, losses, and drawings will be debits and credits. Assets, suppose if it is decreasing, decrease in assets, decrease in expenses, decrease in losses, drawings, we will credit it. Similarly, coming to what is liabilities and equities and incomes, and how it is debited or credited. If you debit any liability, the liability balance increases to decreases. If you credit a liability, its balance increases. Just like a owner invested $10,000, equity increase. You borrow $10,000 from the bank, what happens? The liability is going up. Business has to pay back that $10,000. So today we have received $10,000 loan from the bank. That means our liability is going up. On the asset side, cash is coming in. So we debit cash and credit liability. So always remember, this is the basic equation, right? Now coming, how do I remember what is to debit and what is to credit? You can see the rules of debits and credits. Assets are increased by debits and decreased by credits. So when you buy a car, the car is debited because it's an asset. When you sell the car is credited. And what you get when you sell a car? You get cash. So cash will be debited because it is an asset, right? So liabilities are increased by credits. That means when you borrow something from a bank or when you owe to somebody, then the liability balance goes up. And when you pay the liability, you debit it to decrease the liability. Similarly, equity accounts, income accounts, and expense accounts. Income accounts are increased by credits and decreased by debits. Expense accounts are increased by debits and decreased by credits. So this is the basic accounting equation, and how to debit depends on the nature of the transaction. Now, let us look at the next transaction. So remember, debits are always left and credits are always on the right side of the equation, right? Okay. So let's take one example. Mr. Green invests $15,000 to start a landscape business. So what he is doing, what business is getting, always remember the business entity concept, where the business is a separate entity from that of a owner. We don't mix up the owner funds with the business because business has to keep all the transactions separate from the owner. So business is getting $15,000 and that is cash. So we are debiting cash. And what is it that we are creating? We are creating owner's equity because it's a amount that owner has invested, and at any point of time the business has to return this back to the owner when the business is wound up or closed. So what is the transaction that we are going to record? Debit cash, because it is an asset. To increase an asset balance, we are debiting it. And what account we credit? We credit owner's equity, because the owner is investing. Business has to pay this back to the owner. Owner's equity increasing, so credit it. This is the simple transaction. So next to transaction, let us see. The business is growing, right? It is not static. So Mr. Green wants to buy a truck, a vehicle for $15,000. And what does he do? He pays $5,000 cash upfront, and the balance 10,000 he promises to pay later on by signing a note or a promissory note. So the promissory note is a liability. So liability is increasing. To increase the liability, we credit it. And cash, $5,000 he is paying, that is an asset. Asset is decreasing, so we credit it. To decrease an asset, we credit it. To increase an asset, we debit it. To increase a liability, we credit it. To decrease a liability, we debit it. So this is the basic equation, accounting equation, which we should remember. So debit vehicles 15,000, credit cash 5,000, credit notes payable 10,000, to balance both sides of the equation. Right, friends? So this is a simple example of how to understand debits and credits. In the following video, I will be giving you discussing on some of the business transactions, and we'll be recording the debits and credits in the respective journal entries, which account to debit, which account to credit, based on the type of the transaction and the type of accounts that is involved in the debits and credits. Okay, as you can see, if you debit an asset, it goes up. If you credit an asset, it decreases. Similarly, opposite happens for liabilities and stockholders' equity. So these are the basic rules of debits and credit. Quickly, let us recap what we discussed so far. So we discussed about the rules of debit and credit. Asset and expenses balance increases if you debit, and liability, income, and capital balances increase if you credit it. Opposite happens. To decrease an asset or an expense, we credit it. To decrease a liability, income, or capital, we debit it. So these are base two sides of a coin. To debit an asset, we increase its balance. To credit an asset, we decrease it. To increase liability, we credit it. To decrease a liability or equity, we debit it. So these are basic rules. Hope you enjoyed this video, friends. I look forward to meet you again soon with some of the business transactions. Until then, have a good day. Thank you. Bye-bye.